is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
Tesla has been an incredibly controversial company on every level. Right now, sentiment, though, does seem to be turning. Shares down yet again today to the lowest levels since last October. The question that I have as we sit here at the Bloomberg New Energy Finance Summit is, how much is Tesla a proxy for the world of electric vehicles and the future thereof? To really discuss this and all things autos and, frankly, all things markets, with us is David Kudla, Chief Executive Officer and Chief Investment Strategist for Mainstay Capital. Thank you so much for being with us, David. What is your sense of that? Is Tesla a proxy for electric vehicles?
Good morning. I think that Tesla has been a mover of the electric vehicle technology through the industry. And I credit Elon Musk for this, that he has moved the industry in that direction faster than it might have. In his whole mission of sustainable energy. It's admirable. Is it a proxy for electric vehicles nationwide or globally? I don't know. I think what we'll see in the next 2 years, there is literally a tidal wave of electric vehicles coming to market. In 2 years from now, when we look at the electric vehicles that will be on the road, they're coming from China, that are coming from Germany, that are coming, that will be from different models and different makes globally. There are going to be a lot of electric vehicles out there, and we'll be hearing and seeing a lot more than just Tesla.
So David, just following up on that, if I were to go to the New York Auto Show in April, what will I be seeing in terms of electric vehicles? People are driving trucks, they're driving SUVs. Is that what Detroit and Germany and the others are going to provide for this U.S. market?
Yeah, there's a electric vehicle maker that doesn't get Rivian, that doesn't get as much fanfare, say, as Tesla, that has electric vehicle trucks that are coming. The Chinese automakers, they literally have so much capacity. They have capacity to build as much as 20 million EVs in 2020. And the Chinese government has actually limited the number of licensed first EV startups in that country because there's so many startups looking to come online. And I think that we actually have an EV overcapacity relative to demand. So you're going to see a lot of electric vehicle pickups coming to market because of a flat torque curve. Electric power plant is a great application for a pickup truck or that kind of duty cycle. So that's coming. Range is an issue for what kind of service capacity it's in. But that's coming. We'll see it in semis, and we'll see it in every vehicle, from small cars to luxury vehicles to SUVs, crossovers.
Yeah.
That's the way the industry's headed.
So just broadening out to the auto industry more generally, there's obviously this great bearish sentiment that's sweeping over markets globally as the key 3-month, 10-year Treasury yield curve inverts, and as we get some bad PMI data out of Europe. I'm wondering, how does that factor into the auto sector, given the fact that people are talking about peak car already, and that we've already seen this slowdown? I mean, is that something that would make you shift away from these investments just in general?
Well, there's really three concerns when it comes to the auto industry. There's peak auto, which we had in the 2015-2016 timeframe. Peak auto here in the U.S., where we've really plateaued, but we're seeing sales really start to drop off now. Certainly had peak auto in China, which is really the growth engine for the auto industry globally. That's where growth has really been globally. That's been the big growing market that had their first year of negative sales in a couple of decades. Last year down 6%, and sales have been falling even faster in the first quarter. So that's very troubling for GM, Ford, Volkswagen, all the car makers that were looking to grow in that market. And we also have the secular decline, or the secular move towards ride-sharing services that's coming. So there's the cyclical downturn, a secular transformation of mobility that's coming, and it's kind of a double whammy, if you will, for the
So,
autos.
David, you mentioned ride sharing. We have a Lyft IPO coming any day. Did you take a look at that deal, or are you interested in that business, or what's your thoughts about that business?
Well, it's interesting. It's going to be very interesting. It's very interesting for General Motors, as they have a large stake that they don't have a strategic partnership at this point as much with Lyft, but have a very fortuitous financial relationship with them that's going to work out well. But I expect that IPO to do very well. Ride-sharing services, whether it's Lyft or Uber or others that enter it, that's the wave of the future.
And just real quick here, more generally, as we do see this bearish sentiment waving over things, how are you positioning? I mean, is this a time to be selling risk assets in your perspective generally?
No, I think this is an overreaction like in the fourth quarter. We're getting concerned about PMIs falling in other countries. Germany's PMI fell from 48 to 44. That's problematic for Germany. That's problematic for Europe. Europe's in trouble, and we've been saying that. Our most recent PMI in the U.S., by comparison, we're still in expansion for manufacturing PMI at 53, and our non-manufacturing PMI, we are a services economy, was at 56, the highest level since July of 2018. The U.S. is still doing fine. These lower rates are going to be a boost to both stocks and bonds. So we think this is a little bit of an overreaction, not like in the fourth quarter, and is an opportunity for investors to buy stocks.
All right. Well, coming up this Friday, Lisa, we are at another remote. We will be at the Quinnipiac Game Forum. That is global asset management education, so it should be really exciting. Lots of student-run investments. There'll be 1,500 students from over 150 universities there. And I think one of the highlights of that will be at 10:30 Eastern on Friday. Kathleen Hayes, our own Kathleen Hayes, will interview Fed Reserve Bank President Kaplan at the game conference.
Yeah, I also think it'll be interesting to see how finance students right now are thinking about their futures at a time of negative yielding debt and shrinking margins. What are you looking forward to, David Kudla, in this? What year is this that you've been organizing this?
I've been working on these student conferences now for 8 years, and working with this conference for several years, and it is very exciting. It's an exciting opportunity for the students to interact with professionals. It is an honor to have you guys there broadcasting the show live from 10 to noon on Friday with what is going on right now with interest rates and this yield curve inversion, to have a Federal Reserve Bank president there and being interviewed live on Bloomberg. It's going to be a great event, a great conference.
Yeah, it'll be great. We look forward to seeing you there. That's Friday in New York at the Quinnipiac Game Conference. David Kudla, thanks so much. David, CEO and Chief Investment Strategist for Mainstay Capital Management, joining us on the phone from Michigan. So yeah, this should be a very interesting day Friday to see how the students are viewing the markets, viewing the volatility. Where are the smart kids putting their money right now?